Hello and welcome. Today let's talk about the changes that have recently been made in Table 4 of GSTR3B. GSTR3B is a summary of sales and purchases. If you would like to know more about it, you may consider watching my earlier video, the link in the top right corner. Now what's Table 4? Table 4 contains details of input tax credit, that is the tax that you pay on your purchases. So in this video, first let's see the contents of this new table 4. Then we'll do a quick comparison of the existing and the new table 4. After that, we'll go through these changes in detail and see how transactions could hereafter be reported in the new table 4 of GSTR3B. Let's start with its contents. Table 4 has 4 parts, part A, B, C and D. Part A is ITC available, that is input tax credit available. This part contains gross input tax credit that is available to you. Part B, ITC reversed. Here we can include transactions on which input tax credit is specifically disallowed, or if you don't satisfy certain conditions, then you would be required to reverse ITC. Such transactions would be included in Part B. Part C, net ITC available, that is the difference between Part A and Part B. This part gives you the total input tax credit available to you for the particular tax period. Then we have Part D, other details. Before we go through these changes in detail, let's do a quick comparison of the existing and the new Table 4. The existing Table 4 is applicable up to August 2022. And in Part A, we have first import of goods, then import of services, inward supplies liable to reverse charge, inward supplies from input service distributors and all other ITC. So total of this would be your gross ITC available. Then Part B, ITC reversed. Here we have as per rules 42 and 43 of CGST rules and others. So the difference between these two would be net ITC available in Part C. Then Part D is called ineligible ITC. This has first as per section 17 subsection 5 and others. So this is the format of the existing Table 4. The new Table 4, which is going to be applicable from September 2022 onwards, let's see the format of this new Table 4. Part A is ITC available. If you notice, there is no change in Part A, that is Part A is same as the existing one. Part B is ITC reversed. Here first we have as per rules 38, 42 and 43 of CGST rules and section 17 subsection 5. The changes are marked in red. Here rule 38 has been added and section 17 subsection 5, which was earlier included in Part D, is now included in Part B. Then two others, the name of the head is same, but here what kind of transactions could be included has now been specifically mentioned. Then Part C is same, net ITC available. Then Part D is now called other details, and first head would be ITC reclaimed, which was reversed under Table 4B2 in earlier tax period, and second one would be ineligible ITC under section 16 subsection 4 and ITC restricted due to POS provisions, that is place of supply provisions. I know this has lot of rules and section references. If you are confused about it, don't worry, I'm going to shortly explain these provisions in simple words. Let's now understand in detail what are the changes that have been made. There's no change in Part A, so let's directly jump into Part B. Rule 38 is applicable to banks or financial institutions, including non-banking financial companies. These entities have an option to avail 50% of input tax credit even if they are into exempt services. In other words, 50% of input tax credit has to be reversed, and such reversals can be done through this head. Then Rule 42. This is about reversal of input tax credit when you are into supply of exempted goods or services. For example, let's say you are a doctor providing healthcare services. So healthcare services are exempt from GST. Let's say you have hired a place to run your clinic and the landlord charges you GST on the rent that you pay. So this GST on rent would be your input tax credit, and as you are into supply of exempt service, that is healthcare service here, you will not be able to avail this input tax credit. To put it differently, you have to reverse this input tax credit, and you can do such reversals from this head. Then we have rule 43. This is very similar to rule 42. Rule 42 is about reversal of input tax credit on purchase of goods or services. Rule 43 is about capital goods. Considering the same example, the doctors would require equipment for diagnosis. So GST on these equipment, which are capital goods for doctors. So reversal of input tax credit on purchase of such capital goods can be done from this head. Let's now move to section 17 subsection 5. This is about reversal of ineligible credit. It is also known as negative list, blocked credit, and so on. Input tax credit on certain transactions are specifically disallowed under GST. For example, if you buy a car, you would pay GST on it. Even if this car is used for your office purpose, you will not be allowed to avail input tax credit on it. Then next, purchase of immovable property. Let's say you buy a flat or even commercial property for that matter and pay GST on it. Even if this place is going to be used for your business, you can still not avail input tax credit on it. So such reversals have to be made under this particular head. Now let's move to the next head, others. Here you can show input tax credit reversals which can be reclaimed later. That is, if you don't satisfy certain conditions, then you would be required to reverse input tax credit. Later on, when you satisfy those conditions, you will be able to reclaim ITC. So such reversals can be done here. For example, let's say you buy goods and you avail input tax credit. Now you have to make payment to your vendor within 180 days. If you don't make payment within 180 days, then you have to reverse this input tax credit and pay interest. So such reversals can be done here. Then next instance could be goods in transit. Let's say the buyer dispatches goods to you by the end of the month, say 31st August 2022, and you receive these goods on 5th September 2022. Now because the invoice has been generated during the tax period August 2022, this input tax credit would appear in your GSTR3B for August. But as you have received the goods during the tax period September 2022, you can avail ITC only during September. So you are required to reverse this input tax credit in your August GSTR3B and avail it in September. So to reverse this input tax credit, you can use this particular head. Then next, let's say you have made some mistakes in your earlier GSTR3B. Say you have availed excess input tax credit. So to reverse such excess credit, you can use this particular head. Next, part C, net ITC available. This is very simple. The difference between part A and part B is your part C. So net ITC available is the total input tax credit that you are allowed to avail during the tax period. Now let's move to part D, other details. Let's take up the first head, ITC reclaimed, which was reversed in table 4B2 in earlier tax period. So that means whatever input tax credit that you have reversed earlier under table 4B2, when you reclaim such ITC, you have to report such transaction in this particular head. Let us consider the same example, that is payment to vendors within 180 days. If you don't make payment to vendors within 180 days, the input tax credit has to be reversed under table 4B2. We have just seen that. Now, let's say you make payment after 180 days, say after 200 days or whatever. Then when you do that, you can reclaim this input tax credit. So to reclaim this input tax credit, you are required to report this transaction in table 4D1. Not just here, you are also required to report this in table 4A5. To understand the chain of reporting of this particular transaction, let's first see the format of table 4. This is the format of table 4, which is going to be applicable from September 2022 onwards. At the time of purchase, when you avail input tax credit, you would include this transaction in table 4A5. Let's say you have not made the payment within 180 days. So you are required to reverse this input tax credit, and this reversal can be made in table 4B2. We already know that. Then let's say you have made payment after 180 days. When you do that, you have to include this transaction again in table 4A5. In addition to that, you are also required to show this transaction in table 4D1. Next head, ineligible ITC under section 16 subsection 4. Section 16 subsection 4 gives us time limit within which we can avail input tax credit. To put it differently, if you don't avail input tax credit within the time limit specified, then such ITC would become ineligible to you. For example, for the financial year 21-22, the last date, that is time limit to avail input tax credit, would be the due date for filing GSTR3B for the month of September 2022. If you are a monthly filer, the due date would be 20th October 2022, and if you are a quarterly filer, it would be 22nd or 24th October depending upon the state in which you are registered. So if you don't avail input tax credit within this time limit, then such ITCs would become ineligible and you have to report it in this particular head. Next, restriction due to POS, place of supply. That is, you pay tax in a state while you are registered in a different state. Let's say you are registered in the state of Karnataka. You visit Delhi for the purpose of your business and you stay in a hotel. Now, the hotel would charge GST on the room rent that you pay. As this property, that is hotel, is situated in Delhi, the hotel would charge you CGST and SGST. But you are registered in the state of Karnataka, so you will not be able to avail input tax credit on this particular transaction. So such transactions can be included here. But if you are GST registered in Delhi, then you will be able to avail this input tax credit. But if you are not, then you have to report this transaction in this particular head. Now we have made an in-depth analysis of the changes in the new table 4 of GSTR3B. Let's now see how transactions are practically reported in the new table 4 of GSTR3B. Let's say your IGST credit on import of goods is 1 lakh, on import of services 50k. Inward supplies liable to reverse charge, you have 25k credit in CGST as well as SGST. Then inward supplies from input service distributors, IGST credit of 50k, and in all other ITC head you have 2 lakh in IGST and 1.5 lakh each in CGST and SGST. And this is the total. Out of this all other ITC of 2 lakh, let's say you have input tax credit worth 55k and these goods are in transit. Out of this 1.5 lakh each CGST and SGST, let's say GST on health insurance premium to your employees is 30,000 each SGST and CGST, and 10,000 each on a transaction against which you have not made payment within 180 days. Then 20k each on the transaction for which time limit to avail input tax credit is over. Let's now see how these transactions are going to be reported in table 4. What reversals do you have to do and what is the net ITC available? This is the gross ITC available. Let's now see how much input tax credit do we have to reverse. First, as per section 17 subsection 5, input tax credit on health insurance is specifically disallowed unless it is obligatory for the employer to provide such benefits. For the sake of this illustration, let's say it is not obligatory for you as an employer to provide health insurance benefits. So this is going to be disallowed. Next, others. Here IGST of 55k because goods in transit, that is to be reversed, and then payment is not made within 180 days, so 10,000 each CGST and SGST has to be reversed. So the difference between the two would be net ITC available. Let's now see what information do we have to report in part D, that is other details. First, ITC reclaimed which was reversed under table 4B2 in earlier tax period. If you have any input tax credit reversed and if you are eligible to reclaim this, you can report such transactions here. For example, this goods in transit and no payment in 180 days. When you receive these goods or when you make payment to your vendors, you will be able to reclaim this ITC. Such transactions can be reported in this particular head. In our illustration, there is no such transaction. So let's move to the next head. Ineligible ITC under section 16 subsection 4 and ITC restricted due to POS provisions. Here we have 20K each CGST and SGST, and time limit to avail ITC is already over. So this transaction is going to be reported under this particular head. So the crux of this computation is whatever appears in part C, that is net ITC available, is the total input tax credit that you can avail during any tax period. That's all I have for you today. Thank you for watching.